The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Friday edition, the last day of May, the last day of the week, and a very important session as the Dow gets closer and closer. Now it's 50 points away, 60 points away, to the all-time high of 16,735. And I suspect it will make that high, and I suspect because of what's happening right now, how that high is made, how it is held, and what leg in the Chapman wave the various indices are in is going to be really important in telling us a great deal about the first part of June. So with that in mind, let's run the numbers. Dow's down 25 at 16,673. S&P's up $1 at 1921. Comp index is up 1 at 42.49. Gold is down 12 at 12.44. Yeah, poor old gold. Silver's down 25 cents at 18.75. What's fascinating is that the dollar and gold are down. The dollar is down 16 cents at 80.38, having made a peak E in the Chapman wave right at that tremendous resistance. We spoke about it earlier in the week. It's sitting right at 80.41, the index itself, which is the 200-period exponential moving average. Very positive that it even got there. Not so positive that it isn't able to turn that into support. It will not be that positive if it can't turn into support. Bonds are down 930 seconds at 138, and the TLT, the Lehman 20-year T-bond fund, today's Technical Friday, so I want to do some technical stuff. We've spoken about, you see this chart that I'm showing in TV right now? You see that channel between the little green and the dashed red line they call the inside track in the Chapman wave methodology? You see this lower uptrend line, parallel line? I don't even have to worry about, I'm not even going to put in, at this particular point, the inside track support zone, because this is the repellent zone. That's what we're going to focus on right now. Why? Let me put the whole puzzle together. Before I get, I'll just say that crude oil is down 90 cents at 102.5, and you've got unchanged in the, actually I'm not sure if it's unchanged right now, but you've got copper at 3.1. It really needs to get to 3.5 to show a tremendous boost in production and in the world's economy. So let's just put that aside. If bonds, USM 14, if bonds, which the bond contract itself is in at peak E or leg E right now, it'll be peak E if there's no new high above yesterday's 139 330 seconds, yesterday's high bar. If there isn't a significant pullback from this level, now let me just take this away. You're talking about something very interesting, because now I'm going to remember the little channel I showed you in the TLT. Well, that channel is, you know, we talk about fractals where you've got a pattern that repeats no matter what, how large or how small and what time frame. It's the same pattern. Well, it's the pattern that we're looking at. As bonds went sideways, you know, Bud Rolfs likes to talk about that sideways action between channels. I love to look at the channel itself and draw the inside track repellent zone and propellant zone. But within that, you get a time period where there's a price that isn't all that great from the top to the bottom that it makes. It's more time that you're using than price. And what's happened is that bonds, if they close anywhere in this area this month, have gone a little bit above the inside track buy zone, and that's a positive But I don't. I like to look at resistance and say, no, no, no. You've got one thing happening. What's the other side of the coin? The other side of the coin is that unless the bonds push decisively above, in this case, I'm looking at the continuous contract, 142. Let's go to, I wonder how much I've got here on the contract itself for June. Yeah, I don't have anything. Let's go back to the TLT. Now, the TLT is right as we're speaking, is bumping up against that level. So it might be next week that it has to push through. And that TLT will have to get to the 115.50 area on a month. This is the whole month of June. It's got to do that. And then it's got the whole month of June to do that, and then to close above 115, I'd say 115.30 in the TLT. That'll be the first break of resistance. And then at the same time, what we'd be looking at is what's the affect and what's the effect. If, in fact, we're looking at bonds having had such a very strong move, one of its best moves since it made its all-time high in the 20-year contract, back in June of 2012, which was also the top of the bond contract itself. This is the first time you've had such a big move, and from the 101, I'm talking about the tail, from the 101.17 level to the high of yesterday in the 115s. That 101 to 100, that's really very big. That's 6 points. That's 16 points from the 100. So that's about 15, 16, 17%. That's one of the biggest moves to the upside that it's had in since the bull market in bonds. So what we're looking at right now is if this market is going to make some kind of a top next week, which is my anticipation, it could be just a short-term top. It could turn out to be something more. We'll just go one step at a time. If that is the case, and we'll have to have certain indications that we're making a top, then it would be surprising if bonds, in fact, continue higher because money migrates from the stocks as stocks pull back into the so-called safety of bonds, giving absolutely nothing in dividends, interest. That'll be very, very interesting because that would say, hey, wait a minute, bonds can still go up another 4, maybe 5 points. If that's the case, I say maybe, we don't know yet. And then what it would do is it would tackle this very ugly bar of May of 2013, a year ago. And that had a high of 124.26 and a low of 113.17. So I don't know about 10 points, but I do say that the candle of June of last year, the high of 116.79, that is absolutely in play, if that's the case. Now, what happens? We've got bonds and the stock market going up together. That happens periodically. It's not a very common occurrence. I'm going to get out of this particular chart right here, close this workspace. I'll just say yes to all. And I'm going to go to this one over here so I can get a better picture. And I have to now quickly check because I've changed my... Okay, there it is. Okay, now have a look at this. This is the TYX. This is the 30-year Treasury note bond interest rate fund or ETF, and it's gone to a leg E to the downside. It had a low of 32.67 this week. It's trading right now at 33.14. The 10-year, the gold one here, is in leg C, and the cyan one is the 5-year note yield, and that is in leg B. So if I put this whole thing together, I'm saying a move from this peak G top of 39.74 to a leg E in a very small downside move, using so many weeks to do it, going from the week of January the 3rd of this year till now, to get to leg E, says that this is a very disciplined, a very organized move to the downside. Now, when I say that the yield is at 3.35% in the 30-year, and the 10-year is 2.46%, and the 5-year is 1.53%, what I'm saying to you is in the context of the yields, and everyone talking about the Fed and etc., you don't even have to worry. You just have to say to yourself, wait a minute, we've been here. Where can I get a little vertical line and horizontal line? We've been here all the way back to 2009. There's nothing unusual about this particular rate. What is unusual is that the stock market has gone from the 6,500s to the 16,600s. 16,600 is 10,000 points higher, and you haven't got demand in the bonds. You haven't got demand from the usual activity that is in the general economy. People, companies, conglomerates wanting to loan money and pushing yields up because there is a demand for bonds, and that pushes the price of bonds down and yields go up. That, when people say, don't talk about it being different this time, all I can say is, this is different. It's absolutely different. This is the most different it's been since the Great Depression, the 1930s. We've got things going on here that are, in fact, we've got things going on here that have never been done before. So absolutely, do you think you would have had a 5.5 or whatever it is, over 5-year bull market from March 2009 low without the Fed pumping money like this? See, the real big thing here is, will there be a smooth transition between the Fed letting go eventually, and I think they're going to hold on for dear life. I don't think Yellen is wanting to make a mistake. So, in fact, what we're doing here is we're saying that at some point the economy has to grow in the normal way, the way that we used to, for the stock market to become familiar with the transition from Fed-induced stock market recovery. Remember, the Fed has said ages ago, we want the stock market higher. We want people to feel better. They said that. So the issue now is, how do you transition out? That's number one. Now I'm going to set that whole thing aside, and I'm going to talk about, I've got the bonds here. I've got the bond yields. I'm going to talk about something else. In the context of the housing sector, you see the housing sector has had some of the best news, the best rates historically, and yet the housing sector, the Philadelphia housing sector, has not been able to break above 213.81. It's at 200.27. It is some 13 points. Yeah, it's some more 5% or something away from breaking out to a new recovery high. So this cup, a cup and handle.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. A couple of really good questions in the den. Let me just deal with them one at a time. The TLT, the question while I was talking about the TLT, the Lehman 20-year Treasury Bond Fund, was the monthly chart. Are the technicals starting to turn? Well, have a look at this. In my work, until the MACD crosses positive, all you've got is a retracement mode. The moment it crosses positive, it says great. Now you've got a signal that says on the chart itself, that's a positive thing, and you then want to see the histogram continue to move above the 0% line. That's when it'll do that. But you need the stochastic to rally strongly, and so far the stochastic's only at 37%. That is kind of pathetic. So you cannot have just one. I want two things to be moving in the same direction. That's the first part of this. The second part of this whole analysis is that in the 9-period moving average at 110 is very important. It's trading at 114.21, the TLT right now. And you usually have to use the weekly, the daily, and then the weekly as benchmarks to be able to gauge. And the weekly is at 85%, very strong, and the MACD hasn't shown a single sign of turning down. So this is very positive so far for the TLT, but the answer is I need to see, probably I'll need to see the MACD cross positive. I need to see one monthly sign that there's a peak A that could all the way into July or even August. And then I want to see a B, and that'll say, oh, the Fed's is going to keep this going for quite a bit longer. It doesn't mean to say it's going to go to a D because the technicals are not strong enough yet for that. But all I can say, these are parameters under 110. It's a problem. Above 115.5, it's still very good action in the TLT. That was the first question. The next question was, if I can get them in order here. No, it wasn't Frank Sinatra. It was Yep, I like George Benson, TLT monthly. Basil, can you look at the silver, please? SLV. Well, this is very interesting. Remember, I talked about this some time ago. I said the monthly chart of silver is just, to be polite, I'm going to say horrible. Those were my words. And to be as accurate as possible, rallies are fading quicker and quicker. It's got the H pattern that's going to an M pattern, and there's a real good chance that the low of June of 2013 of 1775 will be taken out. If it's taken out, you don't get support in silver and SLV until 14.37. So that's the monthly chart. I had drawn in, I either took it away or it disappeared, a resistance line. And what I've said for years now is that I like these lines just as kind of a gauge. And the moment you break above it, it's a positive sign. But when they are this long, when you go from the top of April of 2011 to right now, 4 years later, over 4 years later, 3 years later, that line to me is just a visual aid. That's all it is. It's really not. It's not the most important thing. What is very important is the flat MACD and the the continuous H pattern in the stochastic in the monthly chart. And that says to me, silver, I don't see any sign of strength yet in silver. And the weekly chart kind of just confirms everything I'm saying. There's the H pattern. Yeah, it goes to a lowercase M pattern. And that it could even turn into another little M pattern. But it's making lower lows and lower highs. Keep it as simple as possible. If and when 1775 is taken out and then not taken out, but you close decisively under it, that's the SLV iShares Silver Trust, that's going to be a big negative. Are we getting close to a little bit of a bounce? Well, this H pattern that's breaking below the last left side low of 1816 made on the 1st of May, this is the bar, either this bar or Monday, I would say Tuesday afternoon at the latest. There has to be a spring back. That's the way this H pattern works. There has to be a spring right back, because this is the first close below that left side low, if it closes there, which it should. Well, you don't know. But if it does, then there should be a bounce to 1842. Pushing above 1842 says, great, now you can have another little H pattern. But so far, the technicals are still very weak. So I don't see anything. The answer is, let's see, who asked me the question? Mike, I don't see anything here for SLV other than another little bounce. It is at this particular point, if there is going to be a major turnaround in silver, and of course you need gold ready to trigger that. But if there's going to be a major turnaround, I'm going to make a big deal about this 200-period exponential moving average that's being hit or close to being hit for the 1, 2, 3rd. This is the 3rd time in a year. So I'm watching that real closely. And so that was the question on SLV. Don't see anything yet. And any bounce should, at this point, I'm just saying, would only be a little bit of a bounce. So then we got other questions. I'll be right back. Basil Chapman, Dow down 29, S&P's up.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
I don't think I've missed any questions in the den. Other Apple, let me just quickly, I'm going to go back to bonds with the question about Apple. This is a reason why I would love to go to Apple is this is explaining exactly what I'm looking at here. An extended, here's the leg, body, neck, and the extended neck in Apple, trading at 643, up 7, up $8, and in leg E, and the technicals are very good and flattening out, which says there's enough room to go a little bit more in time. Not yet priced. I'm getting close to a price, a price level where I would say, hey, Apple, watch out. At this particular point, the all-time high is 705.07. That was peak E in the monthly chart. Interesting that we are only 60 points, some 60 points away, but this is going to be fascinating for me. Extended leg D, extended leg E, it's actually parabolic in both the daily and the weekly, not yet the monthly. And what's really important about this is that Apple is basically, for many fund managers, as I read it, this is their go-to stock. One of the go-to stocks, but one of the major go-to stocks. And they're talking about a whole bunch of things. And they're talking about a mature company that's still in the running as one of the foremost companies. So if that's the case, I'm going to watch Apple even closer. It was silly. there was a good chance that we could have got in any old time. And now when it's running like this, it's always tough. But you could have got in. You could have gone in the 21st with a high of 606.70, on the 22nd with a high of 609.85, with a high the next day of 614.73, the next day 625.86, the next day a high of 629.83, the next day, it was yesterday, of 636.87, and even today, if you did that, you'd be up, because the high today is 644.17. Very tough. In fact, I'm wanting to spend a whole program on some stocks that I've looked at, and we were about to buy from my opening call, and I just thought, gee, it's real tough to get these stocks when they're vertical, and then they just kept going vertical, even further, like a rocket ship. We spoke about that yesterday. I actually like the term rocket ship. I'm still getting used to it, but it seems to me to be the only thing that can explain a vertical move, especially those sudden spikes. Like you can get a sudden crash, you can get a rocket ship up spike. And I don't like to use two words. I also don't like to use something that has to be explained. It's got to be so like crash is just perfect. Crash. I mean, crash. You just 1, 2, 3, 4, 5 letters. Crash. C-R-A-H. Yeah, 5 letters. It's just perfect. Does everything you need. What I do on the upside, I think rocket ship so far is the best that I can come up with. But I'll try to use anything that's what was it yesterday with the wrist. I wrote it down. I can't remember. I got it just briefly. Coasterus. I don't know. All right. Well, it has to be explained to me. So now I'm looking at is, if the TLT, let's just go back to this. So now let me look at, no. I spoke a moment ago about, and I was going to go back to it. Yeah, let's go to this one, because there's another question in the den, which is what I was thinking was quite perfect for right now. The NQM was a question, with 5-hour peak. So let's go to the NQM, which is the NASDAQ 500. I'm going to the 3. Yep, there is 300-minute, 5 hours right there. What is the, I had to change that. Give me a second here. So that's a D. That's an A, it's a B, that's a D. So that's for now. Let's just deal with it that way, because it's, then I'll explain it. Oh, I had said, that's right, I had said this is Technical Friday. I'm going to explain things a little bit differently. So this is E/A. This is F/B, and this is C. I don't see any way that I can call that a G/C. In the 300-minute, it went perfectly to a peak F and then a pullback, and this is the E-mini NASDAQ 100 June contract. It pulls back, and then it walks the 9 EMA. First of all, you don't need any Chapman wave count. You don't need anything. You don't need Fibonacci. You don't need volume. You need nothing but the 9-period exponential moving average to tell you that it's walking the 9-period moving average support. Even today, it touched the 37.28 level. It went to 37.2650, immediately bounced above it. I have some signs that are saying that we're going to be getting a little bit, toppy. But I've got the count right now as C. And I'd also, at this particular point, love to go back from yesterday. We've got Joseph in Fort Collins talking about, well, I'm talking about the rocket ship, and he came up with another suggestion. Joseph, welcome back.
Yeah. Thank you, sir.
So let's hear it.
Coaster, riff, R-I-F-F, as in a musical term.
Coaster riff. Whoa. Okay, no. Riff. I didn't write down riff. I wrote down something else. Oh, okay. So explain it.
Okay. The coaster part comes from, let's look at it like a roller coaster, okay?
Yep.
The stock market, for instance, it takes a lot of work, a lot of mechanical energy from buyers over years to hit a peak. Okay?
All right.
Once you get to that peak, then you have rest energy. Okay?
Okay.
So all the energy that was put into that coaster, that roller coaster, is now at rest. You just
so just for a very brief moment, anything that you throw up, there's a 0% change that I love to call the 0% change, where you're not going up, you're not going down, but for an absolute minuscule fraction of a second, you're absolutely stationary.
Yes.
Okay.
Now, If you push that coaster 1 inch over the side, that rest energy turns into kinetic energy. Okay?
Downside momentum, yes.
Yes. Now, that momentum is like a market sell-off where everybody's shorting the bejeebers out of the market. They can't short it fast enough, okay? Now, the difference between that and another wave is that kinetic energy transfers back up into what you call the rocket ship.
Right.
Okay? Now, it took work, mechanical energy, to get to peak 1 to the rest. To get to peak 2 is different because that expenditure of energy is from the kinetic energy that came down. So in other words, in the market terms, that's when everybody's out there trying to cover their shorts.
Okay.
Now, the problem comes in is that kinetic energy is going to expend itself at some time. At that point is when you need the mechanical energy, buyers again, to come back in and support the market and drive it even higher.
That's where the battery is run down and you need your engine to continue going.
That's right. That's right. Now, the riff part comes in as a music. It's a sudden burst of energy that sort of comes out of nowhere. For example, a classic Eddie Van Halen guitar riff.
Okay. What instrument do you play?
I play the drums.
Okay, good.
Okay. Now, that guitar riff comes from the chords in the melody of the song that led up to the riff, much like the kinetic energy. Are you with me?
As you're talking now, the picture in my mind. I don't know if you know Benny Goodman, Sing Sing Sing, from the Carnegie Hall performance back in 1939. The recording where they had finished playing, and suddenly the audience it was basically like a classical audience, and then suddenly they started tapping their feet. And what happens, you can hear it on the recording. Benny Goodman says, he mumbles something, but basically he turns around and he says to them, keep going. What they keep doing is they play a coda to the whole Sing, 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 which is the most incredible thing. And you have that lull. And then all of a sudden you got Benny Goodman goes up to this high G, was probably an F in real pitch. And it just screams to the highest level. That is built up in a sense like kinetic energy. In other words, it is energy that is reinforced to the point where it becomes highly explosive. Well, the reason why I like the term, it's taken me a long time just used to saying rocket ship because crashes are used so often on the downside. But the reason why in all the analysis I did, why I liked it so much is, number one, everyone knows a rocket ship. It doesn't matter what country, it doesn't matter where it is. That's number one, just like everyone knows a crash. Number two is it is self-explanatory, and it also has a very quick blast off. And that's really what I like to talk about when I'm talking about like a crash, is that sudden spill, like you talked about going over the side and then it plunges. Yep. So in this case, I love, in fact, the whole idea of this coaster riff, except that it's going to have to be explained every time it's mentioned. I love it for another thing, and that coaster riff would be exactly what I'd be looking at. In fact, it fits perfectly bonds right now, because bonds have had a really good retracement. On a purely technical level, they have reached the last peak at 114.41 in the TLT on the 15th of May was the penultimate move to trying to retest to get to leg D in this channel, which has just been reinforced, like the monthly channel goes back 27 years, I think it is. So this channel basically started back in April, but only became an official channel when you started with the off low and you made a low on the 2nd of April. That created the channel and has lasted, and it's a daily channel. So this is a very long channel to be within the framework of the bumper car side that keep repelling the price to come back to the lows and then go back to the top. Now what we're looking at is if there is exactly what you're talking about, this coast riff that can start up in bonds, it would fit very well in the TLT in the sense that there could be an instant restart with this leg E. It could be leg E/A. And that could start an entirely new move to the upside. Mm-hmm. But do you see what I'm doing here? I'm talking about the buildup of energy that doesn't dissipate. In fact, what it does is it increases. Mm-hmm. That's different, and that can give you a rocket ship to move up. But mostly, I'm looking at as being a sustained, brand new bull move in bonds. If that's going to take, if TLT pushes into the 116s and holds, that can in fact happen, especially if it's all of next week. So if I put the two together, I'm still stuck with rocket ship, which I like because it's that sudden explosive move to the upside that you often get in the futures in the morning if there's brand new news comes out, economic news, and it's favorable, and then it's deemed unfavorable. You get that what I call single leg A up, that rocket ship up, and then it fails. So yeah. I'm going to keep it in mind. I like your explanation. I like the word. I don't know if I'm even going to remember it because it's 2 words. For me to remember 2 words, I'll do my best. I'm going to write it down on a little yellow sticker right here, put it all over my different computers. I like it, but it has a different purpose. You know what I'm talking about? I'm talking about what we would call like in Rossini. You know, in Rossini, what happens is you've got the peak that goes very nicely in 4, and then all of a sudden it goes into just 2 beats, and then it goes into 1 beat, and it goes faster and quicker to the end. And that's the code that we had in 2007 when everyone thought that it was the end in the summer, and then we had that explosive move in the weekly chart to 2 single peaks, higher peaks in October, and that was the top. That's the coda. That's what I actually think I'm going to use that for. So I do like it, but I don't think it doesn't replace my rocket ship at all.
That's okay. I had to give you a shot anyway, Basil.
Yeah, this is like what's his name? Who's the great guitarist? Oh man, my son used to listen to him all the time. With an S. Wait, what was it? Did he play with the Rolling Stones? No, it wasn't. No. With anyway, I'll think of his name. Anyway, okay. With those riffs that suddenly come out of the blue. No, it wasn't Les Paul. It was in the 60s and 70s. Well, anyway, I appreciate that, Joseph. All
righty, sir.
Okay, thank you very much.
Okay, bye-bye.
We just had a discussion on my term that I spent so long trying to find rocket ship. What would replace it? I would love it to be even more succinct than that, but I think rocket ship does the trick. So, and rocket ship is this. I wonder if I can find. It's the rogue wave is really a rocket ship. It suddenly spirals higher and then it fails later on. So, what we're looking at here. Let me show you something else. I want to talk about this on a purely technical basis. In the continuous contract of bonds, there was a move that went peak D in the Chapman wave, and then 2 weeks later it went to brand new leg A. Very often, in fact, I'd say more than very often, a majority of times, instant restarts have the characteristic of going not just to a brand new D that's 4 peaks higher, but they go to an E or an F. And that's why this move in bonds right now and any pullback that we have next week or any sustaining rally is going to be so important to the general market itself. I'll be right back. Basil Chapman, the Dow is down 21, S&P.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risks risk of shorting and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. Basil Chapman, Tiger Technicians. We've got a couple of things in place. I've got Chapman Wave a trend gauge that's just flashed that within 1 to 2 seconds we should have a sudden sharp move to the upside in the futures, which should translate into the cash indexes. The Dow chart right now is headed towards it's at 16,679. It should get next week above 16,735. That would be, I'll call it leg E/C or B, whatever it is. So F, it will trigger the previous peak and plus the new one. The 120-minute chart shows that it's in the rectangle formation. Actually, it's almost like, yep, it's another leg. It's another, boy, these patterns have been familiar. It's another Chapman Wave stalk leg formation, which says it should be a pop-up in the diamonds from 166.60 high. It should go to the 166.94 for another leg up. That's going to be important. So with that in mind, I'm just going to say real quickly, the VIX is not rallying very much. It's trying its best. It can't do it. I suspect that the Dow will make its all-time high, and then we've got to be real careful. So now I can go to Neil in Portland, Oregon. Neil, how are you?
I'm good, Basil. Thanks for picking up the call.
My pleasure.
I have a bit of a dilemma. I've got to liquidate some gold coins probably within the next month, and I've been trying to hedge the position a little bit, being short some GLD and a contract here or there, but quite frankly, it's gone down harder, faster, and obviously the charts themselves look pretty chronically ill. I'm just wondering if there's any hope over the next few weeks that we might see a little bit of upside here.
So let me just deal with this real quickly, and then we can do a little bit more. And let me think it through over the weekend, and I'll talk about it on Monday. But right now, what I'm going to say to you is, in a situation where you're trying to time a sell on something, whether it's a house, whatever it is, or even trying to get a mortgage, if you have a plan that says, I'm going to try to time it so that I can get the best price possible, you also have to then have a backup plan, because you're already talking about an ideal situation that it just fits perfectly into your framework. Actually, whatever it is doesn't have a clue that you even exist. So let's look at the price of the GLD. The GLD looks like it's making another H to an M pattern in the monthly chart. If, in fact, I had said before, if it takes out, I think I had mentioned 119 to 118 support, that would be very negative, because there isn't much going on until it kind of tests 119.17, but there's no real trough. The next trough down is actually at 114.46. And as you say, it's gone quicker than you had thought. So here's my thinking. You could do a partial sale to get the price that you can see in front of you right now. 119.71, gold itself will be priced at around approximately 12.44. That's what you know you can get. And because it's in a free fall, as you say, to the downside, it means that the price that you can see right now is not the price that it'll be. It might not be the price that it's on Tuesday. It could go even deeper. Gold could go down to 12.35, 12.25. And out of the blue on Tuesday, it could spring right back to the price or even higher than the price is right now. So we don't know that. My suspicion is that in your planning, you didn't take in the contingency that said, if I'm totally wrong, what am I going to do? So I'm going to just suggest to you, rather than panic or just say, oh, this is not exactly what I was looking for, do some actual work. Do a little homework and say, you know what, if I sold it today or this weekend or Monday morning, I know I can get this amount of money, and then I can deal with the other half. So think about taking something off right now, and I'll talk. That's the best I can do, but I'll talk about it again on Monday. But that's my thinking right now.
All right.
I hope that helps you.
Yep.
Stay tuned, folks. You got Nico and
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.